Hello everyone. This is the pre-market report video for today, 21st August 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, tech stocks short covering ahead of Jackson Hole Symposium along with the consumer stock positivity on the hope of proposed GST tax reform made the Nifty to close positive for the fifth straight session and that too above 25,000 mark. In the last 5 sessions, Nifty has increased 2.3% whereas Bank Nifty has increased only by 1.2%, which means lately Bank Nifty is underperforming Nifty. News-wise, as we discussed in the last video, China lifted the curbs on rare earth magnets and fertilizers. In addition, on the expectation of zero GST for the farm equipment, which in turn increases the irrigation and fertilizer stock price substantially. Sector-wise, 8 out of 15 major sectors closed positive, with IT, FMCG, realty and consumption has increased around or above 1%, while media and defense were the major dragger. Overall, the advanced return ratio for the listed stocks were 9:7, meaning slightly more number of stocks increased than it decreased. Then about institution, no surprise, yesterday FI was net sellers. They net sold for 1,100 crore rupees, while DI was net buyers. They net bought for 1,800 crore rupees. So those were the quick takeaway from the yesterday Indian market. Then moving to US market, for most part of the day it traded negative since along with Jackson Hole Symposium related nervousness, at that time last FOMC Fed meeting minutes was due to release. At 2 p.m. Fed released the minutes and as far as I know there was no new info. Most participants agreed that the US labor market remains strong and the impact of Trump's tariff is still uncertain whether it's a one-time spike or a persistent issue. Hence, they opted for the wait-and-see approach and paused the interest rate as it is. The two FOMC members who voted in favor of rate cut said there were various clear signs that Trump tariff influence will be only one-timer. Whereas now the US economic growth rate had been slowing, so they recommended the 25 basis point interest rate cut. But as we know, the majority 5-2 voted in favor of pausing the interest rate. So in the last FOMC meeting, Fed paused the interest rate. In response to all, for the second day in a row, Dow Jones alone managed to close on the positive side, whereas S&P 500 was down by 0.24% and Nasdaq decreased 0.67%. In case of VIX, it increased 1% and moved closer to 16. About oil, US crude inventories fell by 2.4 million barrels compared to last week, which was above the analyst expectation 1.8 million barrels. So this larger than expected weekly drop pushed the oil price by over 2%. So at the time of this video, WTI crude trading at $62.75 per barrel and Brent crude trading near $67 per barrel. Regarding Indian ADR, all the major 4 stocks traded significantly positive for most part of the day, but in the end, HDFC Bank and Wipro ADR trimmed some of it. Still both the IT stocks increased 1.5 to 2.5%, whereas ICICI Bank ADR increased around 1% despite being closed negative yesterday in the Indian market. This gives banks a clear arbitrage advantage of 0.5 to 1% and IT stocks also showing positivity. Reliance GDR closed negative in line with the Indian market, so no fresh movement there. However, that banking stocks positivity was not seen on the GIFT Nifty. Early morning today, it traded at 25,085, equating that with the spot market indicating the flat opening but with negative bias. Now, regarding the banking stock positivity, it could be due to one of 3 reasons. 1. Yesterday in the aftermarket hours, similar to Fed FOMC meeting minutes, our RBI also released their last MPC meeting minutes. And in that, our RBI MPC members acknowledged the fact that external uncertainty and US tariff are the key risk to India's growth and inflation. So they want to be remained watchful and agile in the policy decision, which is good though it's not new. But what is new is, even in the last MPC meeting itself, 3 out of 6 MPC members acknowledged and agreed that the fact they got the space to do rate cut. 2 weeks ago in the last meeting, they did pause the interest rate, but this now increased the chance of rate cut in the upcoming MPC meeting. And second, SBI, HDFC Bank, PNB and Canara Bank yesterday increased the instant money transfer system service charges. Higher transaction charges is always good for stock price as it increases the other income. Then finally, third reason, yesterday two government state ministers in the GST council told the reporters that they are proposing GST exemption for individual health and life insurance premiums, which currently attract 18% GST. Now, removing this would encourage more people to opt for health and life insurance. So we could say healthcare life insurance companies, which mainly banks owned, and the medical insurance company all will be on focus today. Then about Vedanta, Indian government appealed to the National Company Law Tribunal to block Vedanta's plan to demerge the company into new 4 separate businesses, arguing that the demerger could hinder the government's ability to recover all the dues from Vedanta, which is not good. So we could say Vedanta will be on focus today. And finally, India Cements will be on focus as today Ultratech Cement said to sell over 2 crores worth of India Cements share via offers for sale. As a summary, for the second day in a row, US market closed on the negative note, and today is the start of Jackson Hole Symposium, and as far as I know, Fed chairman is going to speak tomorrow but not today. Either way, global momentum is not good, and in line with that, GIFT Nifty indicating the potential negative opening. However, Indian ADRs seems positive, so will it make the 6th straight session as positive? Only time has to say. Just for info, today is weekly expiry, and in the index options for the second day in a row, option market was driven by put option addition. Hence, the PCR ratio increased from 1.08 to 1.19. Then, stance wise, all the participants reduced their respective stance. Retail traders or client have net 9% of their open interest favoring bearish position, whereas FII and property traders have net 6.2% and 1.8% of their respective open interest favoring bearish position. Then index future wise, it's not important as today is just a weekly options expiry. Anyway, if required, please pause and have a look. Overall, client or retail traders benefit if the market goes up. FII prefers a negative expiry. Proprietary traders are largely neutral but were net buyers in both call and put options, so they favor either a breakout or a breakdown, not range bound expiry. Anyway, moving on, as per stock open interest, SAIL, Colgate Palmolive, Nuvama, LIC Housing Finance, Infosys and Tech Mahindra are some of the 51 stocks that got an increased open interest along with a negative close indicates the short built up. On the other hand, Dauber India, HCL Tech, HAL, Indigo, Union Bank of India and Suzlon are some of the 59 stocks that got an increase in open interest with a positive price close, which means these stocks got the long build up. About the things to look out, before our market hours, Japanese manufacturing and service PMI data is due. During our market hours, first at 10:30 am, India's manufacturing and service PMI data, then around 2 to 2:30 pm, all Europe, France and Germany's PMI data are still released. Finally, after our market hours for US, their PMI data, weekly jobs data and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 15 points gap down. However, it gained strength and moved higher above 25,000 mark and closed above as well. Thus, on the daily chart, Nifty formed a bullish candle with minor upper and lower shadow, indicating a continuation of the uptrend. In addition, Nifty cleared the 25,000 mark resistance, which coincides with 50% Fibonacci retracement level, which is a positive technical signal. Furthermore, RSI increased to 57, signaling a healthy trend, and MACD also moved closer to the zero line with a bullish crossover. Hence, if Nifty sustains above 25,000 level, the next target is 25,200, followed by 25,250 to 25,300. On the downside, 24,850 to 24,800 zone is expected to act as the strong support. In case of Bank Nifty, it opened more than 100 points gap down and underperformed Nifty, then closed below 55,700. Thus, on the daily chart, Bank Nifty formed a small bearish candle with both upper and lower shadow, following a green candle in the previous session, indicating a range-bound action. Over the last two sessions, Bank Nifty took support multiple times around 55,550 to 55,600 zone, and at present it trades below its short-term key moving averages, the 20-day and 50-day expense moving average. Hence, the key support is at 55,600 to 55,550. A break below this could open doors to 55,400 to 55,350. However, immediate resistance is at 55,950 to 56,000. Regarding the options front, the maximum call option open interest was at 25,500 strike, followed by 25,100 and 25,200, with maximum new call option rating at 25,050 strike, and then 25,100 to 25,250. On the put side, the maximum open interest was at 25,000 strike, followed by 24,900 and 24,950, with maximum new put option rating at 25,000 strike, and then 25,050 and 24,950. Thus, from options data, it suggests that 25,000 to 24,900 zone is expected to act as the strong support, with resistance at 25,100 to 25,200. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.